Hey everyone, let's see if this works this time. Okay. Should definitely work. There you go. All right, we got 3 people. Now it definitely works. Abdurrahim Diab. Aboud. What's up, man? How you doing? Hey, Rania. It was really nice talking to you today. I was going to send you a message too saying I'm excited. What's up, Chief? Okay. I'm excited. I was really looking forward to this live stream, and I had some time, and I'm like, you know what? This is the perfect time. It's the perfect time to do it. Just to jump in and start answering some questions. I can't type. No, but you're typing. I can see you. Just all. Hey Pierre, ça va bien mon gars? Same fam. Okay. Let's give everyone a few minutes to join in, and then we can get started. It's really weird. I had a really weird situation with YouTube. Like, look, see, I kept getting this live streaming isn't available right now, and that's me. So I don't know what was going on. It was really strange. I just could not get in. I'm fishing in the trenches. Nice. I like it. I live in the trenches. I live in the dock. All right. Did you guys post up more questions? And I'm very exposed. What's up, Bruce? I do think that we are going to be up only for a bit. It's working now. Please try again. What's our kingfish of the day? I don't know. I love sea bass. Where you are is sea bass is definitely the best kingfish of the day. You guys are not fishing for trout, are you? No. They don't have that. Oh yeah, grouper. Yeah, that's true. All right. I think we got kingfish is a sort of fish. Yeah. Kingfisher in India. Mackerel. Yeah. Yeah. Okay. If you guys have questions, just we'll go through them all. But I think we can get started. We already have like almost 10 people now in. So I think that's probably enough to get going. I'm getting this. What? Where did he post that? Market chat. No, it's working. Let me. Are we there yet? Yes, I think so. I think we're right back to where we were in November. All right, guys, should we get started? Or should we wait? What does everyone think? Should probably get started, considering we might get a lot of questions. Okay. I think let's get moving here. So what my view is on the market right now. A bit of a pullback here in the last like few minutes. Let me make sure that there's nothing significant happening. Yeah, just the stock market is going exactly what we were saying this morning. Okay, so I think we're in great shape. So if you remember everything that I was saying in terms of what's driving the market instability and the uncertainty and the anxiety in people, it was the fact that President Trump was implementing tariffs like on a whim, at the seat of his pants, making decisions, and without really preparing anyone for those types of decisions that were having like wide-reaching, broad implications on macroeconomics, on the financial circumstances across multiple regions around the world. I mean, the implications were significant. So now that he just restructured the tariffs down to 30% with China, and China now is going to reciprocate back to reducing their tariffs down to 10%. I think that definitely drives a lot of good positive sentiment with everyone. So what I like, and I'll just go quickly, and what I'm seeing that is very positive is the fact that, first of all, Bitcoin is exactly in my glorious, beautiful range of 92,000 and 106,000. And we said this right when it entered 3 weeks ago. Okay. So it already touched and entered that range 3 weeks ago. So, and we broke out of this incredibly bloody, 3-month plus downtrend that we were in. Now, we're actually on pace to have the highest weekly close if we do in fact close this week above 103,000, right? So bear that in mind. And then the other thing that I love to see is that Bitcoin dominance topped exactly where we said was around 65%, and now we're reversing down, and we're on pace to have a very strong close below the 6-month uptrend. It was a 6-month uptrend since basically the end of November to now, where Bitcoin dominance kept on increasing. So Bitcoin continued to extract out more market share for itself. So continued to dominate the market. And it was in a 6-month uptrend, right? So now we're finally on pace to have a strong weekly close, just like we did back in mid-November. And that gave us like an incredible push for 2 months. So if we do in fact get this weekly close, that would be very, very bullish for us altcoin speculators and like small cap and micro cap traders, right? So that's metric 2 that I really like. Another metric that I love is overall, and this is just a repeat of what I've been sharing in the market analysis, but I'm hopefully it's better to like verbalize what I'm seeing and how I'm interpreting the market. Everything I'm going through right now is literally in the market scorecard. Okay. So this market scorecard to me has been a complete lifesaver. It's something that I've been using for years, and I finally just sat down and wrote it all down. I wrote all like 50 metrics down one by one back in October. And I use this to be able to help guide whether or not I should be bullish or bearish towards altcoins. It's helpful to be able to see the price of Bitcoin and so forth. That's fine. That's directionally helpful. But the scorecard to me is a lot more useful to be able to help guide whether or not I should be bullish or bearish towards altcoins. It's as simple as that. And what I'm going to do now is ideally you want most of them to flip green. If they don't flip green, then we're not going to have a macro alt season where everything goes up only definitely for like 6 to 12 months, right? But we were so close to hitting this in November. We were only 4 core metrics away from hitting it. Now, right? So like 44, 45, 47, those are critical, right? Those are critical for me. And we didn't get those, and that's fine. That's fine. So, however, we did get very close, right? Do we need all of them to flip green? We need most of them to flip green. The only ones we don't need to flip green are like metrics 20 to 30, and that's it. So the 4 that didn't cross, that didn't flip, is 14, 44, 45, 47. Same four. Those did not flip green. And unless we have those flip green, I'm sorry to be the bearer of bad news, but like we're not going to have a macro altcoin season that persists for like 3, 4, 5, 6 months like we had in 2017, like we had in 2021. It's just not going to happen. But so until then, we'll have these thrust mini altcoin seasons like we did from November to mid-December to the beginning of January. And we use the scorecard to help us identify when to go long, and then use it to go when to go short. Like if you remember in the trades channel, you all pushed me to like yell from the mountaintops to tell everyone to de-risk in January, right? And I did everything I humanly could to like warn everyone to exit in January. And I was like, this is a very good time to de-risk and to rotate profit out of high risk positions. Now, I did that, but my problem was I still was too risky, right? I was taking way too much risk, where I was rotating out of high risk positions to other correlated high risk positions, which breaks the entire principle of hedging your bet and diversifying your portfolio. If both assets are correlated in terms of their risk exposure, in terms of their price movement, in terms of their volume movement, then it doesn't make sense to just rotate capital from one position into another high risk position like HAT and SUI AI, right? It's better to just hold stables. There's no reason to have prolonged exposure when you're up so much. Like we were up like 100x in some of the positions. There's no reason to just keep rotating that into other positions, you know? So my goal is to go to the situation where the next time I want to listen to myself more. So the next time I'm saying it's time to, this is it. Like we had an amazing run. It's time to de-risk. Then it's time to de-risk. Like I'm not gonna argue with the data, right? To me, I'm gonna hold stable coins. Like there's no reason why you don't want to have more and more exposure to stable coins. That was to me, it was a big mistake that I want to be able to. I just want to do better next time, and trying to find the position here. We are up massively in profit across all AI agents and Launchpad positions. You can consider taking all your initials on profit if you like. I'm bullish on AI agents. I'm predicting this to be the first of countless AI agent bubbles. Right? It's exactly what I said. I was like, this is 100% bubble. We need to get the F out and we need to de-risk. I did that. But what did I de-risk in? I re-exposed my capital and redeployed my capital to positions that I had belief in and I had conviction in. But those positions, they all crashed, right? I mean, if you have DOGE and you have Sol crash 60 to 70%, how are we ever going to possibly expect HAT and Opus and RM9000 and Clank Fund to do any better, right? They're not going to do any better than those, right? So they all crashed. Many of those crashed, 95 to 98%. And then now we've bounced up quite a bit from the lows, like up 400 or 500% from the lows. But my goal is when I make these announcements, I'm using the metrics, right? So I'm using the metrics to do that. And it's not just an arbitrary model. Like I'm using a sophisticated group of metrics that has taken me years to prepare and to be able to fine tune it and to back test it and make sure that I improve upon it, right? And to me, this has worked really well. It's worked quite well. So my goal is to just start fresh and then see where we're at. So I'll do that this week and then I'll post an update. But until then, let me go through the main metrics. So again, Bitcoin in the beautiful, glorious range of 92 to 106,000. Check. And Bitcoin dominance topped at 65%, exactly what we said. Check. Crypto outperforming stocks on a sustained basis, multi-week frame. Check. Crypto outperforming the NASDAQ 100 index. Check, right? Persistent. This is 1, 2, 3, 4, 5, 6, 7. 7 consistent weeks. We've been on top of this since the beginning. Crypto outperforming the Russell 2000 index. So Russell 2000, again, is the micro-cap, small-cap stocks, the highest risk speculative publicly traded positions you can have in the United States. This is 7 weeks going into our 8th week now, where it's outperforming the Russell 2000 index. Very, very good for us. Global stablecoin dominance collapsing back down and breaking below the range and breaking below the 7.4 range that I kept mentioning over and over again. Check, right? So it's like check, 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 check. Everything is clicking exactly where we want to be. And as of 8 hours ago, finally, we have a small breakout with altcoins finally outperforming Bitcoin. So this happens. Usually this happens around the time when things start heating up like crazy. And we have basically like a 2 to 4 week, 6 week window, potentially 8 week window. And you have this opportunity to de-risk, restructure, consolidate your positions, make sure your assets are not correlated. If that doesn't make sense, then ask me. I can calculate it all for you. I can help you. I can tell you which assets are correlated, which ones aren't. And then you basically want reverse corollaries. You want positions that don't move in the same direction, and that and you have to focus on the beacons. Like this is just my suggestion. This is what I'm doing is I'm focusing on the beacons, and you can see that this model does not fail. In that, when you look at meme coins, when did meme coins start moving? Is when Doge finally started outperforming US dollar and started outperforming Bitcoin, and until then, was doing nothing. Meme coins as a subsector within crypto was not moving in a very bullish direction. So that's why you focus on the beacons. You focus on the pinnacles, the peaks, the stars, right? The ones that command a huge amount of interest, and because they represent that sector. So for me, Doge is a beacon for meme coins. Sui AI is a beacon for layer 1 and layer 2 blockchains. Virtual is a beacon for AI agents, AI launchpads, and marketplaces, right? Tau and virtual, etc., and ALCH and some of the other like variants of AI framework and agentic frameworks and AI, decentralized AI computing. Those are the beacons, right, for AI. And then when you look at bio, this is the beacon for DeSci, right? So in other words, decentralized science projects are not going anywhere at all until bio protocol recovers and has some kind of sustained strength above 9 cents. If we don't go above 9 cents, we're not going anywhere. Like it's already down 95%. So why would we think that decentralized science as a sector is going to have any type of rally that's sustained without the beacon doing well, right? That's where the strength is derived from. Capital goes into bio first, and then it distributes to the other DeSci projects as people are more willing to take on more risk and be exposed to more speculative positions. That's why I keep harping on the beacons, right? There's just nothing like it. The difference in the metrics this time versus November 2024 and versus October of 2023 is Ethereum's finally waking the F up. Finally waking the F up. It hasn't had this type of breakout in so long. And I've shared this, and I sound like a broken record, but it's taken so long, like for practically 4 years. 4 years, it's been in an absolute rut, catastrophic, multi-year collapse, right? And we've had so many false breakouts. Like these are textbook false breakouts. Textbook false breakouts. You get these breakouts, and then you just continue to set lower highs, and then eventually lower lows. Then you have lower highs, and then lower lows. Lower highs, lower highs, lower highs, and then lower lows. And it just, you have this unbelievable, consistent false breakout pattern. I pray, I really do, that this is not another 19th time false breakout, right? It's only been 2 weeks. So if you look at the data just very closely, right, and you don't have to, I could show you this across multiple metrics that we've had multiple false breakouts with Ethereum, right? However, we've never been this massively oversold. And I shared this. I shared this in Blockcircle multiple times. I shared this is an incredibly attractive time to accumulate Ethereum. Like we've never been this criminally oversold in the history of Ethereum. Like we were more oversold on April 30th than we were during the Ethereum DAO hack, right? during the December 2018 bear crash, more than the COVID flash crash, right, where everything went down 50%. We were more oversold than we were back then, right? That's why this was the best time to accumulate Ethereum back then, right? It's the perfect time to at least have some exposure to it. And if you look back at what I posted about when you look at sentiment, right? You just look at sentiment. It never fails. If you look at where we were, right? The global fear seen in the traditional markets, where I wrote this was back in February and in April 8th. We called the bottom perfectly, right? Because when you look at the entirety of the volatility of the S&P 500 going back, 30 years, we had the most extreme volatility was around April 8th, April 9th, right? And this was literally the volatility back then was higher than during COVID. Just think about that. Just think about how extreme of a situation that was. And then when you look at I shared the sentiment scores too for March. When you look at those scores, it's just so obvious that we're gonna have a relief rally. Like there's no question about it in my mind, and that's exactly what we had. Now the question is, let me pull it up so you can actually see it. So look how bearish the sentiment was, right? The sentiment was literally resembling levels last seen 70 years ago, 80 years ago. That's how bearish the sentiment was. And it's so easy to get caught up in that incredible cycle of negativity when everyone on Twitter is suffering from anxiety and like suicidal thoughts, and everyone is like, the world is going to end, tariffs is going to collapse everything in the market. Like, okay, maybe, but the point is that we've also had past fears and scares situation like that in the past, right? And the data shows that. So, and you see that. So, and even if you look at the index of consumer sentiment that's published by University of Michigan now, you see the same thing. You see the exact same phenomenon. That sentiment, I'll show you, it's still not better. Like we're projected now to get to 52%. Like see, we're at 50. We're going to be at 52, right? We're going to be at 52 by May 16th. We'll be able to get some preliminary May data. So that'll be this Friday. But you can see it's 50. That's outrageous. There's no reason to be that bearish. But that's where we're at. So it's just important to look at that. Like 52 is literally where we were back in 2022, and then back in 2008 global financial crisis didn't even hit 52. All right? The 1980s collapse, and that recessionary period, we hit 52. So those are the metrics I'm seeing. Now, the reason I'm more excited now is what I was saying was that we're finally seeing a breakout with altcoins outperforming Bitcoin, altcoins finally breaking out with sustained strength, still not quite at 50, but that's fine. And then you can see that across multiple time periods. Like on the weekly is very good. On the daily, it looks even better. So what I'm waiting for is some kind of sustained confirmation on a weekly basis. And hopefully we'll see it. We've had a few false breakouts here. This is what I was talking to you about. Is I don't like seeing these false breakouts. However, this is good. Like we've just set a new high from, it's basically a 1.5 month new high. And if we break this level, it's a huge amount of resistance of 0.14. Like this is the smaller microcap crypto versus Bitcoin. If we can break above 0.14 and head back to 0.15 all the way back up to 0.22, I would be, then it's going to be beautiful. Like we're going to be in a really good position. But yeah, that's how I'm seeing it. What else? All right, so let's go through some questions. Chef Rojo, do we need all of them to flip green? No, we talked about that already. we all did. Have you opened, or are you looking for opening new trades after those you just mentioned, considering the variable conditions we seem to be in right now? Yeah, so what I'm doing right now is I'm using the momentum trading engine. You could see that the momentum trading engine has been incredible for me. And like what I've been doing with it is, if you look at the configurations that are open, so I'll show you which ones are still active. And there's 4. So those 4 are still active. And wait, let me go back. So those 4 are still active, and I'm using those. So when you see those being active, that means I'm trading. I'm trading those positions here. So I'm using these 4 configurations: 1, 3, 4, and 6, and they've done well. Like configuration 4 is amazing. Like this has been, I think it's like 97% accuracy at successfully closing Bitcoin longs on the 1-hour basis, and it always secures 1.5% in profit without leverage. If you use leverage, you can get 3, 4, 5%. And if you use a trailing stop loss, many times I've done much better than just doing 1.5 to 3%. I've done a lot better just by trailing into position. But it did really well at catching the momentum shifts and then going long at the right time. So these trades are open all the time. So this configuration 1 is Solana. Configuration 3 is Bitcoin, but on the 1 day. Configuration 4 is Bitcoin on the 1 hour. And then configuration 6 I just launched is Solana on the 8 hour. And this one I think potentially could be the most promising, because it has a close to 80% win rate, but more importantly, it has, I'll show you, only 16% drawdown. So to me, that's a very attractive position that I would strongly. But the most important thing is it outperforms buy and hold by 8x. It outperforms you buying and holding Solana back in January of last year to now by 8 times. So with only 16% unrealized loss, it's going to be really hard to find something better than that. Like to me, this is what we want. And if you run it from the January of this year, it still gives you 50% returns with no leverage. There's absolutely no leverage. There's no margin risk. There's no liquidation risk. Like this is really hard to find something superior to configuration 6. So I'm trading those. I'm also trading the Alpha Hunter. Like the Alpha Hunter has been this newest iteration has done really, really well just for quick scalp trades. And I think the best thing we did was we separated Pump Fund, Boop Fund, and now as of 2 hours ago, Bonk Fund. We moved all those 3 to just Alpha Hunter Solana memes, right? That's a lot better, because to me, and I'm just avoiding, to be honest with you, I'm avoiding the vast majority of these launches, because Launchpad token deployments are ones that are usually controlled by cabals or insiders, and they invariably pump and then they dump, right? And it's very far in between do you see a project that has utility, that has function, that is going to be launched on those launchpads that encourage fair distribution of tokens. Because if you're an entrepreneur, if you're a founder, you're not going to be motivated to go and have all of your tokens in circulation where you only control 3%. That doesn't make any actual rational sense. You need to be able to have those tokens to raise capital, to do multiple series of fundraising, to be able to fund your treasury, to grow the business, scale the features, have some for brand advertising and marketing. Like you really need to be able to have that capital to grow. And if you don't have it, that's not very good, right? That's not very good. So so I would try to avoid these if you don't want max risk, but I'm picking. Like I'm being very picky about which ones. The Bonk Fund ones, I can tell you, are already doing a lot better. So so yeah, the Bonk Fund, the Boop Fund ones are even better than Solana Pump Fund, and the Bonk Fund ones that end with BONK, right? Those ones are already doing, I think, a lot better. Like you can see like this, right? BONK. This was a Bonk launch. And going forward, those were going to be in the Alpha Hunter Solana memes launch. But if you see this one exploded, right? And we caught it. Look at the time, 4:10 a.m. Look at when we caught it, 4:22. So you can't. There's nothing like this in the market. And I'm not I'm not the type of person to ever brag. Alex is not the type of person to ever brag. That's not our culture. Like we're not, people that are gonna, you know, talk too much of like our what we have. But I will say that there's absolutely nothing in the market that even closely resembles what we have in the alpha. And that's you're only seeing version one. So that's what I'm focusing on in terms of executing trades. And then you can see that we have multiple other channels that we're in the span of testing out, and hopefully we'll be launching soon for like testing. So that's something that I've been, working day and night on, as well as the momentum trading engine in terms of like market analysis. So that's what I am doing. Now, what else? Let me go through your other questions. So that hopefully answers your question, Mateo. So 4 weeks from today, yes. Which metrics do we need to change to turning more cost short-term bearish? So what I'm doing in terms of so what I do, I'll show you, is you don't have them to flip. You don't need them to flip from green to red. What you need is you need to have clear invalidation criteria. So the invalidation criteria and the invalidation conditions basically means that if those conditions start to hit, that means you should become a lot more protective and a lot more bearish in terms of your bias, in terms of your view, right? So for example, if Bitcoin suddenly breaks back down below that range, I would become bearish. If Bitcoin starts to struggle here at 105, 106 and starts to lose momentum, and you start seeing momentum flipping back below zero, and you see the relative strength starting to weaken, and you start seeing potentially a flip on the MACD and some of the other, leading and lagging indicators, then that could be first red flag. Another red flag is if you start seeing topping patterns, right? So the reason I said for everyone to de-risk in January is I started to see a topping pattern, like a very clear topping pattern here, right? Where you're struggling to set new highs and then you continue to stay range bound. And some people will classify it as a consolidation window. It may or may not be, but the point is it's clearly struggling to set new highs. So if you start seeing this pattern on its own, is not particularly helpful. But if you start seeing a confluence of these indicators on these metrics all showing you that you're starting to see a clear topping out pattern where you have potentially lower highs and potentially lower lows, you need to be very careful, right? That's the time to start, really considering de-risking. Just trying to turn on the light. So that's one. So looking at these custom metrics, when you see a clear topping out, be very careful. Another thing is the same thing with the stablecoin dominance. So whenever you're seeing global stablecoin dominance starting to revert back up, that's a very good time to start considering de-risking and rotating into stables. It doesn't mean the market that the local top is in, but it means the local top is very likely going to be in within a few weeks, right? So same thing with Bitcoin dominance. You can start seeing that reversion back up, right? You could see that small relief rally or the small rally that we had, and then you can start seeing the topping out pattern, or you see a clear reversion back, right? So that's how I would do it. Can these metrics be added to a free TradingView subscription? Yeah. So if you go to the market scorecard and go to the bottom of the post, Mateo, do you see this here? So if you click this link, you can then replicate this link here. You can replicate the watch list. And then this has a lot of the same metrics, right? So it has a lot of the same metrics that I put in. So like sector status, meme coin status, AI status, crypto versus equities, volatility tracking, like it's all there. Or you can just read my updates, and then you should already know exactly where we are at. And then, no, you're welcome, man. And then you were asking about, Abdurrahim, you're asking about, can you show us noobs how to use the engine? So to use the engine, what I would do is go into the MTE chat, so the Momentum Trading Engine chat, go to the pinned messages, and then click this post from February 28th. And what you can do here is I cover everything, how to do end-to-end automation using the momentum trading engine and using centralized or decentralized option and on this live stream. So if you literally click this, it'll take you directly to that moment in the live stream that walks you through it. That was a really long live stream. But then I show you exactly how to automate it using WonderTrading, and then I also show you how to use it, how to set up your own private node in Render and your own virtual private server to be able to run it in the cloud directly. And you can just clone the GitHub repository and get it going. I don't think you should do all of that right now. I think you should just focus on automating it using WonderTrading. You can do it for free for a single configuration, and it works perfectly. It works perfectly for me. I've never had any issues with it. And then basically in TradingView, you'll see that you have alerts, and then you'll see that what you'll end up having is WonderTrading will end up looking like this. So you have an alert for Solana USDT, and then you have your message, and then you see exactly where you want to send it, right? So all of that is explained there in the video. But what I would do before you watch the live stream is I would watch the tutorial. So in YouTube, what you can do is go to Blockcircle, go to videos, and then watch the tutorial called Momentum Trading Engine, which is it's here. So this one. So this is what I would watch. And then this basically explains everything about the Momentum Trading Engine and exactly how to configure it, how to do everything. So all you would do is you literally open the configuration, and then you watch the video, and it shows you how to add the Momentum Trading Engine as a strategy. You go to inputs, and then you follow. You just copy the exact same configurations one by one. And then when you have it launched, you right click, you say add alert, and you set up an alert, and you configure TradingView to the trade execution engine, which is like WonderTrading, or 3 commas, or Mizar, or Cornix. I've tried all of those, and they all work perfectly fine. So, and can the engine be integrated with HL? So I think you're thinking Hyperliquid. Yes, it can, because Mizarbot. So if you go to Mizarbot, it does allow you to. If you go to Mizarbot, it does allow you to do Hyperliquid automation with their Mizar. This. So this. So you can absolutely do it, because I was helping Alex set this up actually. See. So you can automate your trades through Hyperliquid using Mizar, M-I-Z-A-R, Mizar. Yep. You can't do it in the US, but you can still do it. Yeah, Hyperliquid. All right, guys. What else? What other questions? I love that we're getting more and more capital enter. Like, this is what you want, right? This is exactly what you want. Like, another reason I was bullish in November and why I'm bullish now is, if you see, we were having a topping pattern. That's no good, right? We don't want a topping pattern. We want money entering. We want money exiting, or money that's, the outbound is not outpacing outpacing the inbound, right? We want the inbound outpacing the outbound. So we want this breakout. So this breakout was very good in November. I love that. And right now, we had a topping out, right? But then we had a sustained 3-week breakout. So hopefully you're seeing like my sort of, crazy vision of using the scorecard, but it's never failed me. Like, I really do mean that. It's just so comprehensive in tracking the entire health and performance of the market. And then it gives you a very simple bias of whether or not you should be long or you should be short, right? Okay. So what other questions? There were several questions here. Let me make sure I can answer them. So how do you see the market across 3 time frames? Now, August, September, and end of 2025 till 2026. So I don't want to make any predictions on where I feel like the market's going to go. I'm just going to use the scorecard. So the scorecard is going to tell me if I should have a long bias or short bias, and whether or not I should be de-risking and taking profit aggressively into stablecoins and or into Bitcoin. Those metrics help me read the market exactly at the right time and at the right pace. And it gives me advanced detection of everything. So it gives me a view on where the market I believe is going to go far earlier than any other system that I've seen, right? And I mean that humbly. Like, I don't mean it in a bad way. I mean it humbly. And like in the scorecard too, there is a whole section on sentiment analysis, but some of that is measurable, some of that is not measurable. But using the research app, you just go to blockcircle.com, click Alpha Hunter, and click Simple, and go to the investor sentiment section, and you can see, right? You can see so many useful metrics here, being able to just read where we're at. So if I look at like Google search volume for Bitcoin in the last 90 days, see, we're pretty good. I mean, we were at a 57% interest. That's not high. It's out of 100, right? In the last 90 days, we're only now half as popular in Bitcoin's search volume as we were 90 days ago. That's how I feel like how early we are in terms of crypto. But if you look at the last 5 years, we are very low. Like we're at 20, right? We're at 20. We are literally 1/5 of Bitcoin is at 1/5 of its historical popularity as measured by Google search volume and demand for the term Bitcoin across all queries. Think about that. And this is really, really, really useful to be able to spot tops. Like if you remember, the top in May of 2021 was May 15th, market top. And this started topping at May 16th. It was 100%, right? And if you just look at anytime you get like a massive explosion, right? You remember when I called the top in March 2024 and I said, I wrote like a whole essay about why we should be significantly de-risking. Bitcoin still wasn't even, it was only half as popular. But if you looked at the 90-day popularity back then, it was topping at 100%, right? At 100. It's indexed out of 100. Back in November, these things were heating up, right? We we're at 64. So we broke the prior high of that year, and then we set a new high, and it was trending higher and higher, which was good. I mean, that's when we were seeing all the different metrics supporting this as well. And the same thing when you look at the Wikipedia page views, like I was just showing you, and then the social media interest as well. So whenever you're starting to see YouTube new subscribers across like prominent channels, right? Whenever you start seeing YouTube growth across prominent channels, then that's very powerful, right? So if I'm seeing, let me set this on a linear scale, and let's set it for last year. And this showing you new subscribers versus lost subscribers. Whenever the market starts heating up, you start seeing this massive increase in terms of new subscribers to prominent YouTube channels, which are the ones here. And that's it. And this pattern has worked really well. So you'll see there's hundreds and hundreds of metrics across thousands of cryptocurrencies and 18 blockchains. It's all in the research app. It's all available for everyone. You don't even need to have a Blockcircle subscription to access all this, so you can share it with anyone you think would benefit from it. The fear and greed index, something that's used in the past, but this works really well too. Like just being able to know whenever you start seeing this massive confluence of bubbles, then things are heating up, right? You're starting to see 93, 94, 88. Whenever it's staying above 90 for prolonged periods of time, market's getting way too hot. So it's time to start de-risking. That's how I'm seeing it. Yes, I already answered this. You anticipated the bounce. How do you view it now in terms of, I answered this. If BTC breaks all-time highs, is that a sign of sustained rally or bull market, or just still a bull trap? To me, Bitcoin breaking the all-time high is of no value at this point because the custom metrics will tell me everything I need to know. So if all of a sudden we set a new all-time high, That would be really good in terms of if we can break, what is it, 615? If we can break 615 on crypto outperforming stocks, that would be phenomenal. That would be phenomenal because the all-time high was 640. We didn't break it the last rally. But if we do break it, that's another metric of the 4 remaining that need to flip green, right? Same thing with the Nasdaq. We didn't break the all-time high of 194, right? We got close. We got super close, but we didn't break it. And the Russell 2000 was the only one that we broke. So, and we just set a new one. See? We just set a new high last week, which is exactly what we did last time. We set a new high initially before the other ones did. That was back in November. So I think everything is pointing to like a continued rally here going forward for a bit. And then we'll see where we're at. So yeah, hopefully that helps. And then how can we front run, speculate the shift from quantitative tightening to normalization of the balance sheet, real quantitative easing? Can it happen during a rally like this or out of nowhere, or only after more pain, after lows? It's only after more pain and lower lows, but maybe the pain that we've already had and that we already experienced was sufficient. And what I was showing you before was you can see that they're already pivoting. They're already pivoting. Just look at the data. They're already pivoting. Look at the steepness of the curve. It's starting to flatten out. That's all we need. We just need market level quantitative stabilization. And that's only driven by them normalizing their policy decisions, right? So if you look at what they did in the past, this steady state policy is what we need. That's all we need at minimum. We don't need quantitative easing. I don't even care about quantitative easing. I just want steady state policy. This is where the Federal Reserve is just stabilizing, and they're not buying or selling. They're just keeping their balance sheet stable and consistent. Right? To me, this is heaven, because that's exactly what we needed in 2016 and 2017 when the market exploded. In 2021, it was post recessionary crash of COVID. That's when we had this massive, up $7 trillion printed, not just balance sheet, but across the entire money supply. And then obviously it was expanding the balance sheet. And now we've been paying the price for 3+ years of them quantitatively tightening. So in other words, I'll show you, I'll explain it even further. If you see a pattern like this, that would be heaven. I would be the happiest man. I think you all would be very happy if that happens. If you see this, that's no good. Then that's back to where my prediction of they're not going to pivot likely until like September, October. And that's only going to be after a pretty significant pullback. So if Trump doesn't restructure his tariffs and doesn't extend out the 90-day pause, then we're very likely going to have a market that and the economy completely broken, and the U.S. Fed will have to intervene no matter what. But we're not there yet, so I don't think it makes any sense to even worry about that right now. I would just keep track of these. Like, look at where we're at in terms of interest rates, and see whether or not, and then look at the economy as well. Like, look at the delinquency rates. Right now, you don't want these rising, right? These are all, if these continue to rise this way, we're going to have a recession. No, I mean, I talked about this at length in the past. I don't want to just repeat this, but see, we had a nice little reversion here on the delinquency rate on credit card loans and commercial banks. Like, we were rising higher, but now it's reverting back down. That's what you want. This one is sort of holding steady. This is delinquency rates of all commercial industrial loans. And then on real estate, it's still rising. That's not good. If it goes above 2, I would be a lot more concerned. But delinquency rate on mortgages is also starting to increase, but not at a dangerous, alarming rate. But those are the kinds of things I would probably focus on a lot more than anything else. And then I would also look at, I'm trying to show you here. I look at the interest rate. Like whenever you're starting to see this rise, that's not good, right? Like this is what the US Fed really wants. Like they want money to not be available in circulation for people to speculate and take risks on. They want money to be less accessible. They want money more to be more expensive for you to be able to secure loans. And they want the cost of capital, which is the cost for you to secure a loan, to be higher. And if it's higher, then it's going to deter you and discourage you from taking more unnecessary risks and to spend more frivolously. They want to discourage any type of discretionary spending. And that's why that personal consumption of expenditures number, right? The PCE is that's why it's so important, right? These metrics, this is very, very important to track because you don't want it to rise at an alarming rate. You don't want this rising at an alarming rate. If it does, then that's just going to provide sustained risk of having persistent inflation. Because if demands continue to rise, then merchants and retailers are going to continue selling their products at a higher price. And that's not good for taming and controlling inflation. That's not good for overall affordability of citizens. And when I'm talking about the personal consumption expenditures metric, this is not just pertinent for US citizens and residents. It's also a very important metric for when recessions are going to take place. And then the rest of the markets around the globe track this score. And it's reflective of that type of sentiment as well. So it's a very important metric. That's my main point. Hopefully that answers that. ETH BTC just swept its cycle range lows. Do you think it will happen with others? Yeah, it's already happening. So I talked about that already at the earliest part of the session. Do you think we're still in the classic 4-year cycle, 2 years bear, 2 years bull market? I wouldn't pay any attention at all to this 4-year cycle, 3-year cycle, left translated, right. It doesn't. What matters to me is the scorecard. Like the scorecard and the metrics to me trumps. Go long only when you should have a long bias. Go short only when you should have a short bias. De-risk, restructure, accumulate stablecoins as much as possible. Try to be Bitcoin heavy when the market is incredibly bearish. Accumulate as much as you can, but have some exposure to a lot of the alpha hunter trades. Have some exposure to the momentum trading engine, because if you sold everything, for example, you sold everything, and in January, if I sold everything and I put it all into the momentum trading engine across really any of the configurations, I think we would only be you would be down 10% to being up 30%. That's the range. Think about that. To me, this drawdown is so important. This drawdown is so important. It shows you what your exposure is to the downside in the event of a complete market crash or in the event of a complete market explosion. So it limits your upside, but it also limits your downside so much. And it's really helpful to just manage risk, Like I think I want to just keep shifting more and more capital to the momentum trading engine going forward. So yeah. Okay. What other questions did you guys all have? Is JOS competition to HAT, or do they have different stuff? Okay. What else? Are the metrics close to flip green, or do we have to look at this? Yeah, I answered this, brother. So let's look at JOS. And we can look at that. Oh yeah, the Julia operating system. I don't know. I mean, who knows? And it's old. I mean, it's only less than a month old. So I can tell you right now that this looks like textbook market manipulation in terms of price action. But it doesn't mean it is. It suggests further investigation would be required in my eyes. It wasn't launched on Pump Fund because it doesn't have the contract ending in pump, and it's not trading on pump swap. So this is interesting. Like a recent sell now, 20 seconds ago, where the rest of it was all winners. Yeah, I've looked at it when it was first launched. But yeah, I mean, I think it definitely could be considered like a pseudo competitor to TopHat, just like the other one that was launched by the other AI company, DOGE, right? So there's also this one, and there's another one. There's a bunch of AI launchpads, marketplaces that are all coming out. So yeah, I wonder if these competitors, are they threatening to the market share, or are they actually complementary and helping bring more interest to it? I've been curious about that. I mean, it's just something to keep an eye on. But I don't think it's worth. To me, what's funny about this is that does it make any sense for it to be worth 3 times more than Hat when Hat has 6,000 plus AI agents in circulation? It has hundreds of thousands of transactions, and it has tens of thousands of users. Like, I would justify that Hat valuation should be much higher. Problem with Hat, again, is it was launched on Pump Fund. So the team doesn't control the lion's share of the tokens. Sometimes you do want a team with genuine intent, like Patricia is leading TopHat. She genuinely wants to help the project grow, but I don't think she has access to deep pools of treasury, of funds in their treasury. And it's because, even though it had a fairly high bundle rate, a lot of those tokens were sold, right? And this is the problem with Pump Fund. So this is the fundamental issue with Pump Fund. The other thing about TopHat is, if you look at their statistics, they have, I'll show you. So Dune, look at their TopHat statistics. I wanted to look at this actually recently too, because not this one, it's the next one. Because they had a massive collapse in terms of people actually using it, just like virtual. And I want to be able, I think this is right, but there's not updating the graphs for some reason. Yeah, it's not updating this anymore, but it was updating. You know what? They have another one on their website. So here, it had a link before. There it is. I mean, that's the exact same Dune template, but there's a bug here somewhere. They used to have this. This was working before. Now it's not working. But this would show you. It can show you a massive increase going into January, and then it crashing back down, like 85% drop in users. Same thing as virtual. So if you look at virtual Launchpad crypto Dune analytics, you could look at this too, and you could see, there you go. You see this token launched. This is my problem with AI agents. Like, how can you go from 7,600 tokens being launched to now only 2? Right? That's like, does that mean that we're back early November 2024 days with AI agents? Like, fine, you can launch a token, 17,000 launches, that's fine. But I would want to see how many consistent users are they having. This is my concern, right? It's like, are we ever going to reclaim those highs again? That's my, like, the price is rising, fine. DEX volume exploded, but I would want to see the number of daily active users. Now we're definitely getting some increase here. Users is increasing too, a little bit. Nice little user increase from 30 to 500 plus consistent number of active addresses. So that's 10x increase fundamentally. That's good. I mean, that's very good for the entire sector. All right, guys, any other questions? We still have a lot of people live. I mean, anything else you want me to look at? Oh, how do you track Sol wallets and trade P&L? Tracking Sol wallets are the same ones that I posted in the announcements channel. So if you go to the announcements channel and then scroll up, so hopefully you'll be able to use the Alpha Hunter Telegram bot that we're building to actually track Sol wallets. But until then, you can use this. So if you go to this one on December 26th, I talked about the Alpha Hunter. And then I talk about which wallets to go through. And it's this, but I don't want to, trying to keep it simple here. Where is it? Here. So October 23rd, if you go to this post, I mentioned several of them here. See, DropSpot, Solana Notify Bot, and the other one is Ray, like Ray Yellow, and then they have like Ray Blue, and they have there's a whole bunch. Solana Ray, and then Drops, right? Ray Yellow, Ray Silver. Those are all really good for tracking Solana wallets. What else? What are some other questions? And trade P&L. And then, yeah, that's what we're building now, actually, too. So we're building our own Alpha Hunter like P&L watch. So you can track the profitability and loss of any wallet across multiple blockchains. And then to be able to follow that wallet too. So yeah, we've been nonstop building. I mean, it's been amazing. It's been really good. Okay, guys, any other questions? Oh, one more question about the MT engine. Does it open positions and close them too, or do you have to close them manually? It's up to you. So it can be completely automated end to end if you want. What I do though is I like to close many of the positions myself. If I'm in deep profit, I don't want to have a round trip. So what I do is like configuration 1, for example, like this one, right? It's been long on Solana since 160, right? It already hit like 180. Like I don't know how much more I want to be in profit. I don't want to wait until this closes. So for this one, for configuration 1, it's a lot better to go and do a trailing stop loss. Configuration 4, the same, right? So configuration 4, I say suggested manual exit using trailing stop loss. So to me, what I like to do is if I'm already in a lot of profit, I don't want to rely on the trading engine to tell me when to exit. I'm already in a lot of profit. Just trail the position, take some profit if you want, and then trail the rest and make sure to give it enough breathing room for it to grow. So the performance you mentioned, how do you calculate them if there's a discretionary variable or closing the trades manually? I know this is the you're asking the right questions. Like this is the challenge, right? So like whenever, think of it this way, like when I'm posting a new configuration, we say this configuration says like here, configuration 6, right? It's like 330% since January of 2024, and that's outperforming buy and hold of Sol. That's you writing every single trade and entering and exiting exactly as the momentum trading engine is scripted to do. But in reality, your returns may be lower or may be higher depending on whether or not you're trailing the position rather than exiting. What I like about configuration 4 is that with the performance that you see of configuration 4 is you exiting at 1.5% profit. So that's like that's the minimum profit level that you're exiting. But if you're trailing the position, you can do a lot better. I've done a lot better on that just by doing configuration 4. So here, let me try to find you when I first launched it. So when I went live with it was, where is it? I guess I could just go at the beginning. Yeah, here. So August 2nd, 2024, right? Oh, 2.5%. Sorry. That's because of the leverage. But without leverage, it's like 1 to 1.5%. On it gives you 550% return and that's outperforming buy and hold of Bitcoin quite a bit. So buy and hold return is 274%. So you're outperforming buy and hold by 2x. That's assuming you're just exiting at 1% or 2.5% if you have short leverage. You can do a lot better than that. Right? Like you don't have to take profit every single time here. You don't have to take profit here. You can trail the stop loss, give it sufficient movement, like 5-6% stop loss, and you could very likely ride a lot of this. You would have definitely gone stopped out here, but that's fine, right? At least you went from, instead of exiting at 42,000, you could have exited at like 55,000, right? So hopefully that's making sense. Any other questions? Anything else you want me to review? Is there any project you want me to look at? Is there anything in terms of screening, evaluating? Anything you want me to help you set up? Just please ask. I'm happy to help. Okay, guys. Well, I think that's a wrap. That was good. Very productive. All right, guys. Love you all. Ladies and gentlemen. If you have any other questions, just tag me, please. I'm happy to answer. All right.